Good evening, good evening, good evening, everybody. Good to see you. I hope you guys have had an absolutely fantastic week. Yeah, big night tonight. Want to talk about insurance? Oh, my goodness. I tell you, I got some new premiums in, and what is going on right now? So let's just start this by saying, obviously, as an operator of the business, my business, our business, mine and my wife's, we obviously watch everything. We want to be responsible, fiscally responsible, control costs, manage costs. And the place to not do that is taking care of your units. That's something that always ends up being a counterproductive strategy. And so as you get into your journey and as you start buying more and more assets, what you'll find is you're typically buying them from people that didn't upkeep the property. They didn't upkeep the property. They didn't take care of roofs and furnaces and boilers and hot water heaters and appliances. You'll very often find a building in disrepair when you're buying it. And then that's when you start to go down the path of, oh my gosh, what did we buy? What do we buy here? You bought somebody else's property that had given up. Didn't know enough to continuously charge rents and continue to keep the number going higher. And so what happened over that time? The building started to degrade. You're buying a building with, this is something that almost nobody, and guys, I can't believe I'm dropping gold this early. Like I dropped gold, but this early, it's a little bit early. When you go and buy a house, do you look at the appliances? Do you look at them? Do you look at their age? A lot of people look at the big five, right? You look at the roof, you look at the heating system, obviously. You look to see the insulation situation. You look to see the plumbing situation. You look to see the electrical situation, right? Those are the big ones. Those are the ones that everybody, knows about and thinks about. What about appliances? You try and buy a kitchen full of appliances. Let's say it's a multifamily. You try and buy 3 kitchens full of appliances. It's one of the things that I actually look at. I actually look at how old all the appliances are in the house. Do I care if they match? Nah, I don't really care if they match, but I definitely look at their age. And it's something as simple as on the stoves, open up the door, click. You can take a picture. On the refrigerators, same thing. Open it up, click. And if you can't, and I just take pictures. I just go in, click, take quick pictures. And that will tell me the date. I'll look it up when I get home. I'll look it up, when I get outside, whatever. But I want to know, is every appliance in there 10, 12 years old? Guess what? I got bad news. You're going to be replacing some appliances in the next 24 months. So that's just a little nugget for you. Let's get going on nuggets. So I'm looking at the insurance piece. I've had no losses and no claims in 17 years. And the one claim I did have was about $30,000. It was a tenant. She broke up with her boyfriend. He decided he didn't agree, broke into the basement and started a fire. So it was arson. We couldn't prove it, sadly. But anyway, insurance covered it. No problem. That's when I used to have a $2,500 deductible. And quite frankly, one of the worst parts of my strategy when it came to insurance. So as we're getting into it, insurance, and we continue to look at insurance, the numbers are insane. We are paying for the insurance company's laziness of writing claims, writing checks. And obviously we all want our claims covered, right? Makes sense. But they would much rather negotiate a small settlement and get out of it than fight something in court. I've talked to a number of insurance companies, and I've not talked to the sales guys on the front side. I've talked to executives in insurance companies. Many of them will tell me, obviously not disclosing who they are, or obviously not willing to let this be attached to their name. But they've told me flat out, they said, it's just easier if we just write a $10,000 check, because if we go to court and we try and fight it, it could be $15,000, $20,000, $25,000. And I'm like, well, but my But somebody going after the insurance company for me, that's not the payoff, right? That's not going to make my rates go up. You guys just have to fight it because I don't want to pay that out. I was told flat out by an insurance broker, hey, just give them your information. They'll call into the insurance company. They'll do very, very little around it, but they'll just write them a check and they'll go away. I was like, I don't want to do that. I don't want my rates to go up for no reason. This person's creating a fraud. He goes, well, if it is, they'll probably find it. I go, I'm not talking about probably. They're going to want to get this off their desk as fast as they can. These people are money hungry losers. There's nothing that happened. They're completely lying about the situation. And we're just going to pay them out. That is not what I pay a premium for. I don't pay that so we can just pay out. I want to fight this. And they basically said, we're not going to fight it. We would just write a check. So the best part is that they're spending our money. Then they will charge us more. And then we don't cash flow. So as an example, there's this one asset that I own. The biggest thing for insurance companies is safety hazards, but also roofs. That's the biggest thing for them. They ask about electrical, and they ask about plumbing, but the biggest thing for them is roof, because the roof can cause the most amount of damage pretty quickly. And so I send her pictures. I send one of my brokers pictures of the roof. I send the pictures over. Two of the roofs are metal roofs, and one of them is a 30-year architectural shingle roof. So we're going through this process, and she says, "Oh, the roofs look great." And I said, "I agree. I bought the property. The metal roofs were only about 2 years old, and the 30-year shingle was about 3 years old." I said, "So they're new. The metal roofs will last 50 years." And the arc roof will last at least 30, and it'll probably last more based on the structure. It's a different designed roof system. And so it's going to last longer because, there's no valleys to it, like where roofs meet, where you usually will have additional wear and things like that. So when we look at this, I'm in a position where I'm like, yeah, I mean, the rate, sure, it's going to go up, but how much is it going to go up? Like, how much is this thing actually going to go up? My insurance went from $3,100 to $4,500. No claims, no incidences, no reports, no insurance company, maintenance lists. And this is one of the premium companies out there. Now, when I say premium company, I mean, this is not a fly-by-night company. This is a company that takes more interest in properly sizing a landlord. This isn't like just going and buying a retail policy. These numbers are absolutely insane. And they're insane because of three things. One, the cost of everything. But we're still paying like lumber costs what it did 2 years ago. If you guys have been watching Uneducated Economist, you guys will find me there in the chat. Same as Hyder, same as Wayne, same as a bunch of guys here. But this is absolutely insane. Now, the issue is that what are strategies around this? These are not anything that I'm recommending for you, but you guys know that I'm just going to be honest, and I'm going to share with you exactly what I'm doing to get around these absolutely asinine, overpriced costs. One of the things that I've done is I've taken every single one of my policies, and I've moved it from a $2,500 deductible to a $25,000 deductible. The reason that I've moved everything to a $25,000 deductible is because I'm not interested in fighting the insurance company on a $2,500 or $3,000 claim, because as the numbers look, it appears as though, based on some of the things that I've reviewed, that you'll probably pay about 3x that in premium increases. Remember, not one property, but 52 properties. How much do they need to raise to recover their $2,500? Really simple math. $500 in a year, that's the number, right? It's a pretty big number. So anyway, when we start to look at the numbers, and that math is wrong, actually, now that I think about it, it's, if you've got 52 properties and they just raise you $50 a property, only $50, they recover their $2,500. It's not going to be $50. It's going to be 100, 150. And then they're going to get paid back 3 times as a multiple. And then you're scoring higher because you have an insurance claim. So this is a problem. But again, I move it to $25,000 because let's face it, there's something called a third-party assessor. If you don't know what a third-party assessor is, you should look it up. But basically, it's when you have an insurance claim and the insurance company comes in and they're just like, oh, well, we think it should only cost this, and we think it should only cost that, and we think it should only cost this. And so some project that might really actually cost $20,000 or $25,000, they say, we're going to write you a check for $15,000. The fix is in. But now let's take it to the next step. There's something called a third-party assessor, and the third-party assessor goes in there and they will take a percentage of the claim that gets paid out. Usually, based on my experience, it's been 10% that the third-party assessor or insurance adjuster, third-party insurance adjuster, they come in, they look at it, and they're like, yep, we think it should be this. And then they actually will fight the insurance company to say, it shouldn't be 25, it should be 35. But then they take 10% of the 35, so I end up with 31 and a half. Their answer is, well, but we got you $6,500 more. It's better than nothing. So when you look at this stuff, I think that it's beyond unbelievable that it's just like everything else with big businesses. It's just like everything else. They're just waiting waiting in the wings, waiting for their turn to just turn it up on you. So I'm now looking at other options that get me away from this risk and exposure, because again, at the end of the day, we just paid all of our insurance renewals. Would anybody like to guess what my new insurance renewals were? You can put it right down there in the chat. Let me know what you think my renewals for insurance were this year. Very interested to see what you guys have to say. We'll certainly address that. As you guys are filling out your guesses there, I'm going to jump in real quick. I'm going to say hi to everybody. Old REI guy, hello. Hey, Frank and Cynthia, how are you guys? I hope you guys are doing great. Josh, hello. Hey, Kyle Dorn, how are you? Jason Calcebetta, BuzzTune, the Yoder. Hey, Jackie, good to see you. Nice to have you in alive. Great evening, everybody. To you as well, Hyder. Good to see you. Oscar, hello. Yoder, hello. All Night Hyder, bruise that thumbs up for Matt and excite Thiago. Yes, please, guys. Please do that. We got to get this thing pushed out to folks. They got to hear about this stuff, because you know what? We, the people, are the ones who buy the insurance. We make the decision of who stays in business and who doesn't. And that's the thing that should scare the big companies the most. Wayne Wong. Hey, a little late, but hi. That's all right, Wayne. No one's taking attendance right in the beginning anyway. If we only had a crazy spouse checkbox on the tenant application. I know, right? Channel 6 San Diego, looking at a property in a flood zone. If I pay all cash, I think I don't have to have flood insurance. Yes, that's true. So flood insurance is one of those interesting things. I believe, unless it's changed, I actually had a small 2-bed, 1-bath house. I was looking at it. It was on tidal water, which is not rolling water. It's tidal. So it goes up and it goes down. When you get too much water, when you get too much rain, when you get a big storm surge, that stuff comes up and it goes up a foot or 2 feet higher. So that's almost always going to put a property in a floodplain. When that happens, sometimes it can make roads unpassable and that sort of fun stuff. Talk to our buddy Ned Talks, see what he goes through living in New Orleans. But as we go through this process, I get the quote for the flood insurance. The quote for flood insurance was $9,000. And the crazy thing is, and I don't know if this is universal, I believe that it is, but not positive, that they only cover $250,000 of a rebuild. They don't cover the whole house. They're basically just like, we'll give you $250,000. That's how that program stays solvent. And it's only offered by the government. The government's the one that does that insurance. At least it was when the last time I looked and the last time I played with it. So yeah, suffice to say, Channel 6, you don't have to have it if you buy it in cash, but then your entire, capital is at risk. And those are dice that you have to roll. Those are the dice. Um, let's see. Hi to everybody. Yep, Jackie. Hey, Wayne. Yep, Hyder. Hey, Alyssa. Good to see you. Hope all is well. I hope all is well with you and your munchkins. Children, not donuts. For those of you who are Duncan's fans. F insurance companies. Generally speaking, I mean, I get that they have to make a premium. I get that they've paid out a bunch of claims, but I think it's really important who your operating insurance company is. Are they operating in good faith? Are they fighting the fights that they should fight? Or are they being lazy and just taking it because they're just like, well, now we can justify a premium increase? That's what concerns me about the process. Big Hill, just what I needed to hear. I'm pumped. I'm not sure which part, but awesome. Hey, Big Hill. Yep. Makes sense with the deductible. Mark. Yep. Hyder, do you ever sleep? He does not. Hey, Matt Wealth with Rentals. Hey, guys. How are you? How are you? Good to see you. Jack Stewart. Mark, all-nighter doesn't sleep. Yeah, just look at the man's name. All-nighter. It's a true story. 55K a year, 5K a year. 45% more. It wasn't quite 45% more, but no, it wasn't 45. It was probably about 20% more. 186K for old REI guy. My policies are an agreed cash value over inflated number, sales price plus repairs plus 25K cleanup in case of a loss, sell for land value, works for my market. I actually like that strategy. That's one of the strategies that I'm looking into for my market. Josh Burdick, 75K. Good evening, Theodore. Yes, good evening, Theodore. Good to have you here, sir. Let's see. I want to make sure. Oh, channel 6. This is actually why I buy used mobile homes. Yep, when they were built 20 years age, I'm getting 20 years product. Yes, it's a mobile home, but way cash flowing. Oh, for sure. I love mobile homes. I don't own any now because the park thing is really kind of difficult in my state. They're really trying to shut down mobile home parks because there's such a massive tax suck is how bad they are here with how they're zoned and all that stuff. But yeah, so I totally get it. But yeah, so the number was, give me just 1 second. I have that up because it was with 3 different companies. Bleh. 119,000. $119,000 is what I paid this year in insurance. 119K. 119K. That's with $25,000 deductibles. If we adjust that for a $2,500 deductible, it's closer to like 160, 170. Yeah. Yep. And that's one of the things that maybe the insurance company is picking up on. I know that 3 years ago, I was one of the few guys doing this strategy. Now, a lot more people I think are doing this strategy because again, I'm using this insurance for a total loss. I'm not losing or a 6-figure issue. I'm not using it for a 25K issue. I'll just fix it myself. I know that the insurance adjuster, the third party, will come in and they'll say 36 or 35. Then I'm going to pay them their $3,500, the 10%. I'm left with 31.5. Their insurance company might try and get me for between 20 and 25,000 bucks. But I look at it and I go, yeah, that's okay. I can do it for 15. What do I care? What do I care? I'll do it for 15. So I just as soon not owe up to and even if it were right around 25,000, I would say we'd probably have to be 25 at least into the 25 over the 25. So 50 to even have me consider using it. I don't know that I still wouldn't. So yeah, so you guys were, old REI guy. I love that. It's a great number. You were close. Yeah. 35% increase. Yeah. I think last year we were, right around, well, same basis because we added some more properties. So we were right around, yeah, I'd say it's probably a 15% or 18% increase is what I would say. Dylan McMahon, how do you get the best insurance prices just shopping? Any tips on insurance most people don't think of? So we do higher deductibles. like I was talking about. And best price is just like anything else. I shop. I want to make sure that the insurance company has a good rating. So if they're a C, no. If they're a double B, no. If they're a B plus, maybe. Probably not. But they have to have a good rating, because the insurance is only as good as the company standing behind it. And if they go bankrupt or have a bad balance sheet and can't pay out, guess what? Or don't do reinsurance, bye. That's not going to work out. M2 went up about 40%, Hyder says, in the last few years. I'm going to guess insurance mirrors that. I think over the last few years, yeah, it's probably close to that. It's probably close. It's obviously I've added some properties, but so this year I've added 2. I've sold 2. Last year I bought 3. I don't think I sold any. Year before that, I think I bought 12 and didn't sell any. Yeah. Could you talk a little bit about claims and losses, the correct way to handle them, and just insurance in general? So I think that honestly, I only had the one claim. It was a long time ago. All it was, was I called the insurance company. I said, this is what happened. I furnished them with a police report so that they knew it was a crime. And then it wasn't something that I did. And then it wasn't something that was faulty with the house. It bummed me out because I just, in the previous 18 or 24 months, I just rewired the house and I just put in a brand new furnace or boiler. I was bummed because now I was going to have to go through all that. And I had tenants there. What a nightmare that was. So they would cover rent loss. So that was good. But yeah, what a pain. And then one of the moms of the students started calling me like every day. Why isn't it done? Why isn't it done? I said, listen, get off my back. You're not. And this is one of the things I learned about not having them on the lease. I was like, you're not on the lease. I don't have to talk to you. She goes, you're going to talk to me. I said, yeah, that's not going to work for me. So I'm not talking to you. I'll have it done when it's done. Just know it's going to be faster than anybody else could have gotten it done. P.S. By the way, it was your idiot daughter's man picker that decided that he was the guy for a time. And then he didn't like it when she broke up with him. And then he tried to light my house on fire. So before you start getting all judgy and mouthy, why don't you check into that? Unbelievable. Thankfully, I never heard from her again. Big Hill is good people. A local buddy I have chatted on the phone with for a few hours. Awesome. Good to meet you, Big Hill. Do you force tenants to have renters insurance? I don't force them, because if a fire happens in the building, the fire that consumes everything is mine. It's my responsibility. It's my insurance company's responsibility. It's all the personal tenants' items that are not covered. So I tell them renters insurance is optional, and it's up to you. However, if there were a fire, nothing in here is covered and you could sue me and you'll lose. You have the option of renters insurance. You should go get it. If you choose not to, that's up to you. If they have a pet, I make them go get renters insurance and show me what the premium is, because I want to know that if there is a dog bite, I want to know that they're going to cover it because they have insurance. Because if they're just a broke ass, guess what? I'm not getting paid. Or the victim's not getting paid, and then they could try and sue me. Would they be successful? You never know. I doubt it, but it's not the fact that you get. It's really the biggest issue is going to be, what the fact that they can sue you, not that they'd sue you and win. Matt, hey, purchase the boot camp during the last live. Do you know when it's going to start? Yeah, you should. In the boot camp, there's a boot camp 4. Everybody that's in boot camp 4 should have gotten an email. If you didn't get an email, send me something to lumberjacklandlord@gmail.com. But send me something if you didn't get the email. There's a poll there now. We're just waiting for everybody that was invited to vote in the poll so we can pick the best night. It's going to start next week. The only question is it going to be Tuesday, Wednesday, Saturday, or Sunday night? And we put that in there so you guys have a choice, and we always pick the one that the most people can attend. And then there might be a spot or two that opens up, and then I'll let you know if there's a spot or two that opens up. But we are going to be starting next week. It's just a matter of you guys picking the night. So you should see it. It's right in there. The cabinet supplier is me. I own the cabinet company. It's my cabinet company. So when you get access to Bootcamp 4, there will be videos in there of here's how you measure your kitchen. You take those measurements, you follow the instructions, you send them in, and then there's a link because I outsource design to a designer. It doesn't make sense for me to do design when they're a designer and it's expensive. So what we do is we actually you get charged $99 for the design of your kitchen, and then from that they quote it, and then that's what the wholesale price is. That's how it works. So it's in there. Just closed on number 7 rental today. Good for you, Kyle. That's awesome. Hey, Kyle, can you elaborate on that insurance strategy? Yeah, very cool. The strategy Kyle Dorn said that you're looking to try in your market. Could you talk about that some more? So it's basically just like it said there. It's coming to terms with what the agreed responsibility is of us, and that really is that's going to be different. That type of a solution is going to be different company to company. So something specifically that he has in place, we might get something that's a flavor of that, but that's what you can work with other companies where you can do kind of like a almost partially self-insured model. We go with that approach to a certain degree by agreeing at a $25,000 deductible. That's typically what that looks like. Hey, Matt, Cynthia and myself were listening to you in the car the other day. Okay. I told her that I'd like to beat Matt in some type of competition, but I feel like Matt is better at everything. I'm good at. Cynthia asked, what would you challenge Matt to? I said, pumpkin pie eating competition. See the mass destruction that the two of us could do. Yeah, that'd be dangerous. Yeah, I can take out a couple pies easy. Yeah, I could probably do more. I could definitely do more. Yeah, I know I could do 2 pretty easy. I love pumpkin pie. It's truly my favorite. God bless me. It's truly my favorite. Doesn't need to be a competition. Brothers got a hug, man. And that's pumpkin pie eating. We don't do family Thanksgiving. We do Friendsgiving. So we pack up all of our kids and we go to a buddy of mine's house who's been a good friend of mine for almost 20 years. And all 3 of us are in the construction business. And so we get to talk shop and just get time to visit. And it's really cool because we're all so crazy busy. One of the cool things about there being a downturn is maybe things get a little bit slower and we get to spend more time with each other, which wouldn't be the worst thing. One of my buddies actually in that group just bought his very first rental. I'm torturing him as we speak. Yeah, it's pretty awesome. Let's see. Cadron Yemet, please share with everyone what the agreed cash value is. It depends. So they can count it a number of different ways. They can count that as they want to get it appraised. They can count it as what the assessed value is, but you need to be careful with what the assessed value is. The reason why is assessments in most towns are pretty far behind. So again, it really depends specifically on the different vendors that you select because they all do stuff like this differently. The reason that they also do it differently is really kind of threefold. One is some companies are big enough where they'll actually be the counterparty to that risk. They'll actually say, you know what, we're going to take up the other side of that bet on this one because they've played with the numbers. They have actuaries and they say, you know what, this one, we're going to take the risk on this one because based on the value of the property. There is a second option where they basically are a broker for that. And so what they do is when you say, hey, this is the type of product that I'm looking for, they'll ask all their vendors that they do business with. And so it's kind of like a mortgage broker, an insurance broker. On the mortgage broker side, depending on who the mortgage broker is, they might have 20, 30, 40 different banks that will back them up and buy the paper. Buying the paper means you're buying the deal. The other thing that you can do too is, and so with that on the insurance side, it's exactly the same thing. They're a broker. They represent XYZ firm. They call them up and say, hey, do you have a product like this? And they'll say, no, we don't have a product like this. But just like anything, just like I did with the banks, With banks, I've actually made product. The way that we did this was we called them up. We said, hey, this is what we're trying to accomplish. They're like, we don't have anything like that. And I was like, would you like to have something like that? And they say, yeah, it might be something we would consider. But like you learned in my course, if you're talking to the senior lender, that's the person that can make that decision to make that recommendation to the board to say, hey, talk to these guys over here. This is going to actually be something that's pretty good for us. I think we should open this type of a product, because the reason is they can't do it specifically one off for you. They actually, if they do open something like that up, like my other bank did, when they do open something like that up, what they actually have to do is they have to make it market available to anybody. They can make whatever rules and stipulations they'd like. However, they do have to make it market available. So that. Property taxes in Houston just went up 12%. They usually don't go up 12% flat for everybody. You'll find some places went up 5%, but some places went up 17, 18, 19%. We just had massive tax increases here, but it's because Texas and New Hampshire and Florida are much the same. They drive a lot of their revenue from property taxes, not from an income tax. So that's why states like ours, when you've seen this massive growth in the asset value, that's where we get crushed a little bit more. Now we get usually typically higher premium rents than a lot of other places. However, and the states are absolutely always on the landlord side. At least they're neutral. They're not pro-tenant, because if we're not getting paid our rent, we can't pay our mortgage and we can't pay our taxes. And if that's the case, then the state stops getting paid and they need that cash flow. Jack Stewart, I feel like the two of us would have an entire farm of pumpkin pies. It's not that I'm not willing to try. There's actually, we found a farm that was close to us. So where I live, there's probably 5 farms. And one of them is doing pumpkin pies this year. So I'm just saying, I will be there. My insurance went up 40%. Oh, that's awful. That's awful. Sorry to hear that, Don. Kyle, that's great. We use the same ACV method on our policies as well. Very cool. Who do you, old REI guy, who are your, what company is that? What company is that? And are they nationwide? All-nighter. Thanks. Down to my last 2 home. Hit the market today. Going multifamily. Love that. Love that. Love multis. Love multis. Well, for rentals, hello. Jack Stewart, Frank, how's it feel being as awesome as you are today? I know that is a fair question. How is it being that awesome, Frank? Do you have workers comp insurance? I do. Yep. Yes, I do. But I require my subs to carry their own. I require my subs to carry all their own insurances, and they have to have proof of insurance. Matt, I'm tired of peeps saying they can't find deals in my area. 100K into 250 all day long. Mobile homes rock, great cash flow. Drag them, set them up, fix them, then sell them. I don't disagree. I love the mobile home strategy. I actually I like storage. I like storage units too. I've looked for a deal up where I am. I've looked for a storage unit deal for like 2.5 years. And I was really close on one. And at the last minute, they decided to sell. Okay. Do you have equipment breakdown insurance? No, I don't. That is an over-the-top type of insurance. If it's a warranty that comes on a car, I do not buy extended warranties for vehicles. I don't buy extended warranties for appliances, because if they're willing to sell that, if it's really expensive, guess what? That means they know it's going to fail. And if that's the case, I don't buy their brand. All-nighter. I got a bunch of errands to run while wearing my Lumberjack Landlord t-shirt. Keep the ear candy and comments coming, please. Very cool. You could do it in a much worse outfit. Jason Calcebetta, can I change my pick of the day for the boot camp? Yeah, LOL. Looks like Saturday or Sunday is in the lead. 9 votes so far. Yeah, I saw that today. I'm just waiting for, I think we have, I think we were only missing 2 people to make their vote. So it'll be tomorrow at the end. Never got anything for boot camp. Oh yeah, I'll keep, yeah, not an issue. Yeah, no problem, Kyle. Piece of cake. You won't get missed, I promise. Hey, Santy, it's been forever. Good to see you. Hey, Terry, good to see you too. Y'all are making me hungry with all this pumpkin pie talk. I love it too. I'm with you, Terry. It's the best. But yeah, Kyle, no sweat, no worries. You'll get a chance to weigh in. I'll send it over to I'll send it over to Harry in the morning, and we can make sure you get access to it. So no sweat. You won't miss anything. Promise. Hey, Matt, I'm not sure if they're nationwide, but the company is called Shelter Insurance. We found him in our St. Louis market. Very cool. So, guys, check out Shelter Insurance. Make sure you mention Frank Contreras and say, hey, I get a referral from Frank Contreras. Because it's important that goes in the system. When you're building a network, it's important that you always mention who sent you. It's really important. If there's any benefit to that, you want to make sure that Frank gets the benefit for that. It's a good thing. Santy, how's insurance treating me? Up and to the right. Your insurance cover mold, fungus, personal injury. Nope, our state doesn't have a mold statute, and so mold really isn't a problem here. As far as personal injury, yeah, if somebody slips and falls or something like that, for sure. Yep. Dylan, I'm having a hard time finding out what path I should follow. Start with small properties and start building, or property manage 100 plus units, then start buying them once I got operations down. You just have to pick one. Pick the one that makes you feel the best. That's all. If you make a mistake on one house, you can get out of it. You can find a way out. If you make a mistake on 100 units and it's a building, that might be a problem. That's usually too big of a problem to recover from, is the issue. And even though Grant Cardone does big stuff now, he started with a single family house. Christian multifamily strategy started with single family and duplexes. Just saying. A lot of people want to get up to the big unit stuff, and you can, but I find it's always best to learn on the smallest, least aggressive thing first. Learn all that stuff, and that way there's much less risk. Implement all the things that are in the course that you've learned, and you start to see how things work. That's a big opportunity. Here in Atlanta, prices are still too high overall. I'm holding at the moment. Terry, it's the way to do it. Let the game come to you. Wealth of rentals. Why do you like gas-powered heating systems? And do you mean as part of AC for heating? Nope. Those are mini splits usually where I am. Because natural gas is less expensive than oil. Natural gas is hard piped to the house. So if there's an issue, the gas company comes out and has to fix it. If it's oil, tenants can run out because they're dopes and they don't pay attention. And then I have to be the one to go out and take care of it because they can't do it. And they might not be able to afford the emergency service call, and I don't want frozen pipes. So I have to go out and I got to put 5 or 10 gallons in there, and then I got to get the system back up and started again. So those are all preferences that I don't like. Oil is dirtier, and those systems need to be cleaned every single year. Gas is less dirty, and you can usually get by with cleaning it 2 or 3 times. Those are some of the general ideas of why. With a gas issue, again, the gas company gets called right away. If you have an oil tank that leaks or something to that effect, guess what? You're going to have to clean it up. And if it's more than, I think it's 10 gallons or 50 gallons, it's more than a certain amount, well, now the EPA gets involved. So that's why, for me, the best feeling that I have is I like people that have natural gas. Dylan McMahon, I already have the investors already and have a great mentor I'm meeting with twice a week, teaching me everything about running banks and 100 to 300 unit properties. Any advice? Well, he's your mentor. There's no advice. You go with if that's what your mentor is really good at, then I'd be listening to their advice, So we call that an ask hole. when you're working with a mentor and they're pouring that time into you, he doesn't need to do it. He's doing it out of the grace of his heart. He's doing it to be nice. He's doing it to help you out because somebody helped him out along the way. When he's telling you what to do and how to do it, and you have access to that level of mentorship, you take it and you're grateful for it. And you listen to what he says, because if you listen to his advice and he got you into it, then he likely has the advice to get you out of the situation that you're going to run into. So that's where I come down on, yeah, you take who the one is that's putting the time into you, mentoring you, spending that time with you, and you follow their path, because they're likely, that's where they actually have experience, and they're likely to be able to get you out of any jam that you're in. The only challenge with the much larger properties is mistakes are amplified. So for me, I like to go the approach of, if you've already got investors and you've got all these things lined up, that's great. That's great. But yeah, the bigger the property, the largely speaking, the more the risk. If you got 100 units and 100 tenants, and now you got 100 problems. And if you've got a duplex, you have two. So it depends on what else you do for work as well. If this is something you can pour yourself all into, yeah, take the risk, but it is a much bigger risk. It's amplified by the number of units versus what the other side is. Wealth with rentals. Do I like gas dryers? I do not. I also don't like gas stoves. True story. Channel 6, San Diego. Gotta go. That's all right. I miss you. Gas dryers sound very dangerous. They're not dangerous. They're plenty safe. The biggest issue is that it's another gas appliance, and they're more expensive. It's more difficult to work on. It's more difficult to get parts for. So my preference is electric. Yeah, that's my preference. Caldor, my policies are with Foremost. Okay, Foremost Insurance. All right, cool. So Foremost and Shelter. Those are the two to check out, people. And if you call Foremost, drop Kyle Dorn's name. They'll at least put it in the system. I know someone lose the whole house for a gas dryer fire. Yeah. So that can happen in any dryer, though. It's not specific to gas. That's an issue of usually a clogged vent line because they didn't clean out the lint out of it, or it also can be a closed lint trap. It's usually not related to the gas, because if it were gas, it would have exploded. The fire is usually much more related to, and that's the other thing too, is if there's an electrical fire, you can put that out, but you're talking about, popping breakers and things like that. Gas is more, I believe, is more dangerous than electrical, but I don't have any numbers to back that up. That's just experience. Boomer, you might want to get added as additional insured. Oh, for sure. 1,000%. Yep. Mm-hmm. What Boomer's talking about there, which is Don, what Boomer's talking about there is he's talking about getting added as an additional insured. That means that the insurance policy, yes, it covers them, but who does it pay out if there's a problem? That's why you want to be added as the additional insured. And on my regular contractors, or when we're doing a big job, I'm on there as additional insured. Indeed. Shelter insurance products are sold by agents in 15 states: Arkansas, Colorado, Illinois, Indiana, Iowa, Kansas, Kentucky, Louisiana, Mississippi, Missouri, Nebraska, Nevada, Ohio, Oklahoma, and Tennessee. No New Hampshire. That's okay. Kyle Dorn, $5,000 deductible on my policies. Nice. Santi, my local market is crazy. Miami. If you buy a property 4 units down, you lose like 8%. Yep. There's too much old money park in property that does not care. So that wasn't the case like 3 years ago, as an example. Miami is just one of those places that's a cultural hub. It's a great international hub, great weather, lots of new buildings. But in all likelihood, they'll feel any correction pretty heavily. But yeah, right now, stuff inside Miami, I mean, there's a ton of competition. 4 units are, when you do find them, it's not like there's a ton of those. And that's a lot of times what people are trying to knock down and build something that's 5 stories tall that they get 20 units out of. So a lot of people, so it has almost like multiple different cell elements, if you will, that are attractive to people. Well, for rentals, is it best to buy a thermal camera and rent or rent it and check wall insulation. How about a thermometer that shows only numbers when shooting in the walls? So you need a big differential on the outside to inside when doing that. I don't care as much about the wall temp as I do about seeing the difference. You know, a picture says 1,000 words. That's what the thermals do. Me personally, I still haven't sprung for a nice expensive FLIR, FLIR. And the one that I want is probably about $4,000. I can't justify it. So I rent them. You know, they're not crazy expensive to rent. And it's something like, they're usually like $100 or $150 to rent. And so if that means I can get, 30 rentals out of it, well, I mean, 30, that's a lot, 30 rents on that thing. And I use it maybe a couple times a year. So the stuff that we do buy is typically like paint sprayers or hydraulic jacks or cement saws or really high-end expensive table saws. We can buy those used, and we can also find out how many times they've been rented, because a lot of times we'll buy them from rental places. So we'll find out how many times they've been rented, 15, 20, 25, 30 times. And I'm like, well, that's been used 30 times. It's easily going to last 300 times. If I buy that, I can buy it for half the price. It's been professionally cleaned and maintained all this time. And now I have that asset in my repertoire. And like a jackhammer, that can cost you $150 to $200 easily for a day, plus bits and things like that. So if you're a couple $100 a day, we use a jackhammer probably 3-4 times a year. So that thing pays for itself in about a year, maybe a year and a half of use. That's how we do the calculations, is it's really a use-based model. Santi, and lots of non-local investors buying in bad locations and putting overpriced rent that will not rent. Rents are adjusting now. Yep. Yeah, it's a hub. It's a hub for sure. Caldor, my girlfriend is 1,500 miles away and rehabbing the next property. I want her and I both to attend the boot camp. Yep, of course. Yep, we would share the same screen. Yep, absolutely. Yep, we don't separate couples. We don't charge twice. Yeah, so that's not a problem at all. Hi, Dylan. I'm here in Houston too. Very cool. Terry Bello, asshole. Yes. Yes, I termed that phrase a few years ago. This one contractor was just peppering the hell out of me with questions. And I was like, dude, you've asked like 100 questions and they all seem like, is that a blue sky? Yeah. Are those gray walls? Yes. Like, what are you setting me up for? I couldn't understand. So I was like, you know what? You're an asshole. That's how it came about. For me, the Riley A-OK. Have you ever used a 203K loan? Yes. I've used a regular one and a streamline. And curious what type of loan you used when you and your wife first started. 203K. We didn't start together. I did 5 by myself before I got married. So first one I bought was a condo. It was a house hack. I had a lease with a roommate. That's what helped me qualify to buy it. That was my first one. My second one was a single family house. But I had saved up the deposit. And so put money down on that. And then I house hacked that. And then the next one was a 3-family in Manchester. That was 20% down. The next one was another 3-family in Manchester. That was 20% down. And then there was a beachfront house, just like on a lake. I did that one, and that one was a private sale. That was private sale. So that's how we got started, or that's how I got started. And then my wife was, and then I bought one. I bought another single family house that I rehabbed, but I bought another single family house. And then we got married, and then we moved to one of the other single families that I owned, and we rented out that other one that I had just finished the project on. And then we wanted to get back into the area that was under rent. And so at that point, I bought a duplex with her. And that was the one we did a 203K on. Yep. Dylan McMahon, awesome with rentals. I live in Friendswood area. Would love to chat some more. Very cool. Boomer says I use Steadily. They were the cheapest. I was with Travelers and Foremost before them. Very cool. Awesome. Guys, this is what the network is. This is what being in the group is. You've now gotten 4 different insurance companies that you can check them all. Give them your scenario. See if it makes sense. No, it was a gas fire. They opened the garage door and boom, the whole house is gone. Yeah, that makes sense. I mean, but that's not a tenant thing usually. That's usually a gas line thing. Yeah, I would not even trust a tenant with a gas stove. I don't disagree. We don't have gas appliances for that reason. They can leave the burner on. They can leave if the pilot light goes out and they're too stupid to know how to use gas. The only thing that we have is a heat system, and it's because, guess what? They're not allowed to touch it. The only thing that they're allowed to touch is the thermostat. They're not allowed to touch the system. Have you rented to family? Yes. Curious what your thoughts are on that. It was awful. Dylan, yeah, my thoughts are small. If I mess up, less I have to fix, take as much bigger time. Yep. Bigger can have more vacancies, can hire employees easier, can scale faster, only downside, mess up and worse. Will take longer to get started into the first deal. Yeah, it's true. And if you're going into a bad economy, you could go negative cash flow pretty quick. I mean, what are your investors going to be like at that point? Are they going to try and kick you out of your own deal? I rather own my own destiny. And the way that I own my own destiny, I buy a duplex. Jack Stewart. Oh man, I keep forgetting to mention the current remodel that I was working on originally was supposed to be $45K to complete. I'm down to $20K listening to you. All right. Yeah. Look at that. That's a good one, Jack. That's awesome. Good for you. I appreciate that. That's awesome. I'm super excited to hear that. And just to think, it only cost you the cost of the course of the boot camp. Just to think. Guys, my goal when I priced the course at what it was, I wanted to know that it was going to pay anybody back in the first year. If you have almost no rentals, okay, it might not take 1 year, it might take 2, but those are lessons that you have for life. And I bet you there's unseen costs that it saved you. But I'm so glad to hear that, Jack. Congratulations. Jack, well, what are your thoughts about LED lights with wireless controllers? Like them. It can drastically reduce. So I don't like so much like the controllers in the hands, but I do like the switches on the walls. The reason that I like those is because it can drastically reduce your cost to rewire. So I just did an entire house for about $3,000, and there's a lot of Bluetooth switches in the wall. That's okay. My other option was going to be like $6,000 because it was the entire house. Dan M, I'm fairly new. Hey, Dan, good to meet you. I'm fairly new landlord, and one of my tenants dropped I'm going to get an ESA cat on me today. Feels bad, man. Yeah. So Dan, what you need to do is you just need to tell her, I need to get a copy of your ESA certificate. At least make her jump through the hoops. At least make it so it looks good on your part and you did your due diligence. If she doesn't provide you one, she doesn't get an ESA. It's just a pet. If she provides you with one, then you have to let her have one. But what most people don't know is an ESA is one pet. One. If they get a second one, that's no longer an ESA, and I can boot you out if it's a no pet policy. If it is an ESA cat, I do believe you have to check your local state laws, but I do believe you can still charge a pet fee. Not positive, but I believe you can. Because if you don't normally allow them, that's what you can do. Well, the rentals. Dylan, I'm in the Woodlands. Yes, would like to connect. I'm on YouTube and Instagram and can send you my number there. Very cool. The property I closed on today for $65K appraised at $115. Boom shakalaka. That's awesome, dude. That's awesome. Most important thing is when you're done, does it cash flow? Appraisals are nice. Don't get me wrong. No shame in the game. But it only matters if it cash flows. That's the most important thing. I don't care how good of a deal someone gets if it doesn't cash flow. Well, if it can't cash flow, let me put it that way. If it can't cash flow. So let's, as an example, buy a property in Beverly Hills. It's $25 million. You can rent that thing for $70,000 a month. Bad news. 25 million bucks. It's got a much bigger than $70,000 a month mortgage. But let's say the house was worth 30 million bucks or 27 million bucks. Technically, you get a $2 million deal, but you're losing money every single month. That's a bad deal. Gerald Strong, closed my first rental property today. Congratulations. Well done. What software do you use to maintain the books and track spending for your property? I recommend Excel. When you're that new and you have your brand new property, I just recommend Excel. Every single time some money goes out, you can put it in your Excel form. Every single time rent comes in or some payment comes in, you put it in your Excel form. Also, the easiest way to keep track of it when you have just one property, I open up a separate account, a separate checking account. I want to have a separate account, and that way, as I got bigger, it was just, okay, another one in the account, another one in the account, another one in the account. So I used Excel up until probably unit 50, maybe. So I used Excel up to unit 50, and everything was in that Excel doc. Yep. And then I would have a folder on my desktop, and in that folder was my Excel doc. Now you can use a Google Doc and it can be shared, but I still liked, me personally, that was Google Docs weren't a thing then. But then I would actually, in that folder, I would say it was my properties folder. Every single time I got a property, every single piece of documentation I got that went on a given property, I opened up a folder, and then I would put it in that. And then I would do subfolders in that folder. That way I could look something up really quickly. Oh, this house, when did it have to have what, blah, blah, blah done? Boom, that's where I got to go. Yep. But congratulations, Daryl Strong. Well done. Let's see. Brendan Redfern. I just switched to Steadily as well from Allstate. Saved me quite a bit, and I'm in Texas. Costs rising. Brendan Redford, thanks you. Welcome to the channel. Thank you very much for participating. I appreciate that. Jason Calasavetta. I have Steadily also. They were over $1,000 cheaper than everyone. I checked. $10,000 deductible. Brilliant. Love that. Brendan, how many units did you have by year 5? 1 units. 1, 2, 3, 4, 5, 6, 7, 8. 8 or 9. 8 or 9, right around there. But then the great financial crisis hit, because I started in 2002. So 5 years in was 2007 when the world started blowing up. And that's when I couldn't get the next property, and so I had to start doing house hacking. That was that kind of maturation. Good question. Smart move. I've been with them for 2 years. Nice. Very good. Steadily. Steadily. Switch to Steadily. Very good, guys. Very good. See? This is awesome. Something wrong with my mic? Sorry. Here, I can get closer. I leaned away. That was my fault. Thanks, guys. Sorry for that. Sounds distant. Is that better now? Let me know. Let's see. Do you have any, Jack Stewart, do you have any recommendations on LED with wireless controls that you like? I need something. To go past the last bit of knob and tube. Yep. That makes sense. I don't remember the name of them. I'll have to look, Jack. Because you still have to have power to them. You still have to have power to the light. So what I had done was, if there was like a light in the room, or I had the electrician bring up one feed line, and then because they're LEDs, you can then actually connect that into one that has a harness, and then get into 4 others or 3 others. So you have all 4 of those lights there. And then you just put the Bluetooth receptor on that light, and then you can put the switch in the wall, which can just go into a dummy box, and then you get your control there. That's the way that I set it up. That should be helpful to you, and does allow you to get away. That does allow you to get away from the knob and tube. Sorry. I'm very ready. So my top employee, my top guy, Kenny, He and his wife had an amazing baby boy last Thursday, and thankfully everything is good and everything is all right, but I'm very ready for him to come back to work because I hate his job. I did his job for years and I don't want to go back. So I'm very ready for him to come back. Let's see. Jason Calasabetta, their support team is great. Yeah, thanks, Frank. That's awesome. I mean, Don, thank you. Kyle Dorn, 70% ROI over $900 CF after rehab. Love that. Average is 9% in my market. Dude, it's crushing. Love it. Jason Calasabetta, Boomer 16. I've not talked to them since they insured me. Glad to hear that. Hope I never have to talk to them. I know, it's a true story, right? Let's see. Aculus, way better. Cool. Thanks, guys. Yeah, sorry, I just got too far away. I was way back here. Now I'm back up here. Jack Stewart, half the room is already up-to-date wiring. Yep. Lights and switches and outlet by the switch is all that's left for the knob and tube for 4 rooms. So depending on your insurance, you're likely going to need to disconnect that. Way it goes. If any is in service or tied in anywhere, it's considered a knob and tube active house, and that's what you're trying to get away from. So what I would recommend, even though it's probably some money, but you did save $25,000 already, I would recommend getting that stuff removed. It's probably going to cost you an extra $1,000 or $2 to get it removed and put new stuff in. So I would recommend making sure you fully eliminate all the knob and tube. Yeah. Jason Calasabit, Boomer 64. Why would the mortgage company hate it? Doesn't it make sure they get paid if it's destroyed? Yeah. Boomer said, my mortgage company is always griping about the mortgage clause. Interesting. Very interesting. Huh. That's interesting. Sometimes you just never know. I think most companies just complain for the sake of complaining. That's usually how it goes. Let me just see here. I've got good friends, crazy friends, but good friends too. Oh, yeah. All right, we're all up to date. Was in Woodlands yesterday. I'll DM you on Instagram. Cool. This is what it's meant to do, guys. Community getting together. You guys have any other questions? I apologize. I was gonna do how I got a free house tonight, but I am still working on the presentation because I want to be able to show it to you guys on screen, and I don't want to use pieces of paper like this. Why? Because you get that stupid light over there. See, this one's a little bit better. But yeah, I wanna be able to do it on screen so you guys can see everything better. But with my top guy being out this week with his lovely wife and baby, I have not had the chance to do that. I have not had the chance to do that. But yeah, good stuff. Awesome. Well, Kyle Dorn. The property I just purchased, I built the relationship with a local bank out of state for me, local for my market, and got the deal done and locked in at 588, 30-year fixed at par. Phenomenal. That's absolutely phenomenal. Well done. Relationship with the bank. Where'd you heard that before? Good student. Guys, this stuff works, man. People too afraid to talk to senior lenders, people too afraid to call banks that own assets in their market when it's not local to them. Guys, that's a boss move right there by Kyle. I mean, that's what we talk about in the course all the time. Small local banks with assets under management, sub $2 billion. That's where you want to be. That's where you want to be. Guys, I'm going to call it an early night tonight. We covered the insurance thing that I wanted to cover. I've got a ton of stuff on my plate. I got some leases I got to get out for some guys that are moving in this weekend. Super excited. We were down to 0 units for about 3 days. And then we got notice that we got 2 other people that are leaving. Totally fine. What's really cool is one person leaving, the rent's going to go up probably about 10%. And the other one, the rent is going up 23%. So really good stuff. So guys, have an absolutely fantastic rest of your week. I think we're going to try and do something. I'm trying to do something with Dion tomorrow. It hasn't kind of finalized yet because my schedule has kind of sucked this week. But hopefully we'll be able to do a pop-up live tomorrow and talk about a bunch of really objectionable things. But in case we don't do that, I'll see you guys in the next one. Thanks, everybody. Have an absolutely awesome day. Tomorrow, finishing out the week strong. And yeah, let's get it done. Take care, guys. See ya.